Scalping was hard until I learned this one simple rule. In this video, I'm going to teach you the one scalping rule that helped solve 90% of my trading problems and made me profitable. This scalping rule doesn't require hundreds of lines on your chart or the use of any complicated indicators or concepts. Instead, all it uses is one candle. And once I applied this into my own trading, I saw my win rate increase. To prove this, I will first explain the rule and then I'll show real trades I took in the market so you can see it work in real time. So the scalping rule we'll talk about today is called the one candle rule. And this is the same rule in combination with my other strategies that allowed me to have this P&L graph. Now, I made a video on the one candle rule before and it changed many traders trading. However, from that video, I wanted to make a much more in-depth guide on the one candle rule along with more examples on exactly how I implement this in my own trading. So the goal by the end of this video is to teach you how I find profitable entries, how I'm able to hold my winning trades longer, and most importantly, how I'm able to avoid low quality trades using the scalping rule. So really quickly, first we have to talk about what is profitable scalping and how do we actually look to trade these moves. Well, for scalping, what we're looking for is quick market moves to trade within the first 1 to 2 hours in the day. It's very simple. For myself personally, I only trade the first 90 minutes of the day and then I'm done trading. I don't like to sit around and look at the market all day, but rather I like to come in with a simple plan and execute my trades using the rule I'm going to talk about in this video. Now, to further illustrate this, let's talk about how we can find these market movements. So if you look on the left side here, this is the 10-minute time frame. And on the right side here, we have the 1-minute time frame. However, you can see both of these trades are very much the same. One broke below a key level that we had, which I'll talk about exactly how we can find those, and then it came back for a retest. So it broke out, came back for the retest. Sellers then stepped into the stock here, and then this one moved all the way back down to low of day. And if you don't understand price action, I have a full playlist and course going over everything you need to know to become a day trader, and you can watch that playlist after you're done watching this video. However, on the right side here, you can see the same thing happened. We broke below the key level, we came back for the retest, we got weak price action again, and this one once again moved down to low of day. However, what was the biggest difference between the two? Well, the biggest difference was on the left side, this was high risk and low reward. You can see this risk to reward is much smaller than this risk to reward, where we see a little amount of risk for the reward, which means if we risked $100 on this trade, well, the reward on this trade, because it was a 10R multiple, would have actually been $1,000 for $100 of risk. Whereas this one was a 2.5, which means if we risked $100, we would have only made $250 of profit. Not only did we have a lower risk to reward, but this one, because we're on a higher time frame, we were done the day in 6 hours. So we had to sit there in front of the screens all day and we risked $100 to only make $250. Whereas on the 1-minute time frame, we risked the same $100, but we made $1,000, and at the same time, we were done the day in 1 hour. So therefore, with scalping, you're able to trade lower time frames and be done the day earlier so you can go enjoy the rest of the day. Or even if you have a job, school, or just want to hang out with friends and family, you're able to do that as well. So now that I explained scalping, what is the one candle rule? Well, to understand the one candle rule, we need to understand how a stock moves. For every healthy uptrend, when a stock is moving to the upside, it needs a pullback. This means a stock will not just go straight up in a straight line forever. You will always see a stock pull back into an area of support and then move back to the upside. Vice versa, when you see a downtrend, that doesn't mean that the stock will only fall to the downside. You will have a pullback area where buyers step up, and this area right here is what you need to find to have the lowest risk but the highest reward trades. So the main question lies, where do we enter on the pullback? Because we know this pullback will give us high probability trades, they will be low risk trades, and most importantly, they will be high reward. Therefore, we're not risking $100 just to make $100, but rather if we're risking this amount, we want to make at least 2x, meaning we need to make at least $200 to enter on the pullback. And to enter on the pullback, this is where we use the one candle rule. The one candle rule simply applies that in an uptrend, the pivot high down close candle will be used as support. Now, if you don't understand what that means, Don't worry, when we get into the examples, this will make much more sense. However, to simplify this concept for you, we can see that this is an uptrend. And then where this arrow is, this is where we have a pivot high. So this would originally have been resistance. As you can see, the stock rejected this level. However, we then broke above the resistance. And if you've watched my previous videos before, you know that when we break out of resistance, well, this resistance is not resistance anymore, but rather this is support, because sellers tried to bring the stock down here, but then buyers brought it up, which means buyers are in control and they want to hold the stock above this level. Therefore, using the simple break and retest strategy and system that I teach on this channel, we know that this is going to be the lowest risk trade. However, the main question I get is, how do we enter on the key levels? Well, this is where we want to use the one candle rule. Before I explain exactly how to draw the one candle rule, I just want to explain. For the uptrend, the pivot high down close candle will be used as support, which will be the highest red candle in an uptrend. And for the downtrend, the pivot low up close candle will be used as resistance. If we use this red candle as support, we know in this downtrend, it will be the lowest green candle that we're going to be using as resistance. So how do we actually draw the one candle rule? Well, if we take our previous example, all we have to do is mark out the high and low of the pivot high down close candle. In this uptrend, the highest red candle is this one right here. So we're simply going to take a box or a shaded area, and we're going to mark out the high of that candle and the low of the candle. And now this whole area, when we do come back for the pullback, is going to be the lowest risk, but the highest reward entry. So now that we've drawn the one candle rule, that doesn't mean if we just come back into the one candle rule, we enter right away. This is where we need to wait for price to retest, and we need to see strong price action. Now, when we get into the examples in this video, you'll see this being demonstrated much more clearly, and you'll see more examples of how we can actually use the one candle rule, not only for entries, but how to hold winners longer as well. But with this being said, for step 2, when the stock comes back, this is where we're going to assess strong price action. As we can see here, if we play out this trade, we of course broke up. We then marked out the one candle rule right here. And what do we see when we come back into this area? Well, we're actually getting these lower wicks on the stock. Well, this means that buyers are overpowering sellers. This is because we know the reason we even draw out this down close candle is because this is where sellers were first initially overpowering buyers. However, because we broke the stock above the key level and now we're looking for the retest, these candlesticks illustrate to us that the stock actually opened up right here on this candle. We then moved down. That's what this wick shows. So at one point, this was a full red candle. However, buyers brought it all the way back up, and we closed this candle all the way at the highs, and we closed it as a strong bullish candle. Therefore, with strong price action in combination with the one candle rule, this is exactly where we would enter for a high probability trade. And it is very important every time you enter a trade, you need to have the same repeatable and systematic systems. In this example, for the one candle rule, you can see we would enter in on this candle right here because it's showing strong price action, and our stop loss and profit target are very simple and repeatable for every trade. There's no second guessing when it comes to my trading. I try to simplify it as much as possible, and that's why I have the results that I have. For my stop loss, I simply put it at a break of the one candle rule. For my profit target, you can put it at high of day or wherever you get a minimum of a 2R profit target. All this means is if we enter here and we're risking to lose $100 at our stop loss right here, well, we need to make at least $200 of profit when we do come up into that profit target. And here we can see when we play out the trade, this trade worked very nicely all the way into our profit target. And this is exactly how the bullish one candle rule looks. Vice versa, before we get into the examples, I want to show you the bearish one candle rule so you understand that as well. For the bearish side, like I said, we mark out the high and low of the pivot low up close candle. So in this downtrend, we look for the lowest green candle. In this example, that would be this one right here. And we're going to mark out the high and low. And once again, we can shade that with the box to help us understand where it is. We simply wait for that stock to break below that level again. And then when we come back for the retest, we're looking for weak price action. For this trade, you can see we opened up right here at the high of this body candle. We actually were a green candle at one point. However, sellers stepped up and we closed it at the bottom of the candle. Therefore, the price action is telling us that sellers are indeed stepping in for the one candle rule. And therefore, our stop loss will simply be a break of the one candle rule and our profit target will be low of day or the 2R multiple. In this example, low of day gives us a little bit more than that 2R. And therefore, this is where we would enter that trade. And just like that, you can see this bearish one candle rule worked out in 2 candles. So now we're going to come to the most important part of the video. You may have seen other trading videos before, but on this channel, what I like to do is explain what a concept is, why it works, and then most importantly, show you how I implement it into my personal trading to see the trading performance that I have. So now let's go look at some real examples of the one candle rule in the real markets. All right, so here we are on the first example. This is Tesla and we're on the 1 minute time frame. Now you can see the day's about to open here. This is of course the pre-market session. We're not going to come into this day with any levels. And I'm doing this because I want to show you that the one candle rule can work as a standalone strategy, but it also helps make sure that I enter high probability trades. Let's play out the day and let's see exactly what happens. So here we have the first 5 minutes. And just for reference, what I'm going to do is mark out the first 5-minute high and I'm going to mark out the 5-minute low. If you've watched my channel before, you know this is a strategy that I talk about. This is simply when a stock breaks above the 5-minute low, you look for a retest for continuation to the upside, and vice versa. If it breaks below the 5-minute low, you look for a retest to the downside for continuation. Now, with this being said, there are days where the 5-minute high or low doesn't work. Now, what does that mean? It means like days like this, where all we're looking at is strong price action. All we see is buyers stepping in. There is no retest. So what are the areas that would be the highest probability to enter in for a low risk trade, but a high reward one as well? Well, for this trade, if we keep playing it out, you can see that buyers just keep aggressively pushing it to the upside. So what we want to do is look for the low risk area. The low risk area is going to be the last pivot down close candle. So in this example, this down close candle here, we're going to mark out the high and the low, and we're simply going to move this over. This is going to be the highest probability entry for us because we know the 5-minute high is way too far now. And therefore, if we come all the way back down here, this will most likely invalidate the momentum that this stock has. And therefore, the pullback into this area is fine for the continuation. So what we would be looking for is simply a retest and then continuation from this one candle rule. This was step 1 of drawing out the one candle rule. But for step 2, we need to wait for strong price action to enter the trade. As we can see here, when we're coming back, what do we see? Lower wick, and once again, that bullish lower wick candle, which shows that sellers came in, but buyers still closed it above the one candle rule. This indicates to me that this is a low risk trade, and this is something that we can look for potential continuation back to the upside. How would I enter this trade? Well, to enter this trade, like I said, it is very mechanical. We are going to have our stop loss at the break of the one candle rule and our profit target at high of day or a 2R multiple. In this example, high of day does not give us the 2R multiple, and therefore our profit target in this example can simply be the whole psychological number of 325, as this is a whole number where sellers and buyers most likely have orders placed already. Now, this is a 2.32 risk to reward trade, meaning if we were to lose $100 at the stop loss, we would make $232 at the profit target. Enter into a buy position here, and let's see exactly what happens. And just like that, you can see we did have a little bit of drawdown for only 2 candles, which means we had 2 minutes of total drawdown on this trade. And then from there, we hit our profit target very nicely. And this resulted in a $1,940 trade by understanding how to draw the bullish one candle rule as its own strategy when you're trading. Now, of course, I'm showing you this trade as an example, but this is the exact same trade I took live in front of hundreds of traders trainers in the accelerator where I live trade every single day, and they were able to capture the exact same trade with me because not only did they learn how to trade the one candle rule, but they were able to implement it in the markets because I was able to guide them in real time. With this being said, this is the bullish one candle rule, but to really make sure you understand this concept, let me now show you the bearish one candle rule. All right, so here we are on the second example. Now on this example, we're on AMD. The reason I'm showing you different stocks is because this rule works for any instrument you trade. If you trade stocks, options, futures, crypto, forex, this rule does apply in those markets because the technicals are the same. So with this being said, we're going to open up the day. We don't need any key levels prior to the day opening, and we're going to wait for that one candle rule to show up. In this example, what we can see is the 5-minute high being created up here, and we can see the 5-minute low being created. So now, just for reference, we understand that we need to break above the 5-minute high for continuation to the upside. We need to break below retest, and then we can look for low of day and continuation. Now, next week, I will be making a full in-depth strategy video because I've been getting one question so much, and that is which strategy is better, the 15-minute first candle strategy or the 5-minute opening range strategy. I will be comparing both of these strategies, doing a full back-tested session for the 5-minute and 15-minute, and then I'll show you the results to prove which strategy is better. That video will come out July 21st at 5 p.m. Eastern, so make sure to look out for that. But with this being said, let's play out this trade. All right, so in this example, we can see we actually broke below the 5-minute low. Well, this shows us that sellers stepped in and therefore sellers are now overpowering buyers. We know what we're looking for is the retest of the 5-minute low. However, sometimes the 5-minute may not retest like we saw in the previous example. But in this example, if the 5-minute did retest, where would the one candle rule be? It would be the lowest up close candle in a downtrend. As we know, we're in a downtrend now. What we're going to do, because this is the lowest candle, is we're going to mark out the low to the high and simply move it over. All we're looking for is going to be the retest, not only in this 5-minute low, but also this up close candle in a downtrend, because we know structure will not invalidate unless we break this. This is where sellers need to keep the stock below for buyers to not overpower them. So let's play out this trade and see if we get that retest. And right here, you can see we actually broke below. We're retesting, and what happened on this candle? Well, we opened the candles at the lows here. We try to break it back above the 5-minute low. However, this upper wick that we see right here, sellers stepped in. We closed it below the one candle rule, and we closed it below the 5-minute low as well. So what we can do is look to enter into a short position here, and our entry criteria is the same every time. And this is exactly why this rule is so simple to follow, straightforward, and systematic. We have our stop loss at the break of the one candle rule, and we need at least a 2R multiple. In this example, the 2R multiple comes near the 116.50 key level. Let's enter into a short position here, and let's see exactly what happens. We can see a little bit of buyers stepping up. If you were trading the 5-minute strategy alone, this candle right here could have potentially stopped you out. However, because we understand the one candle rule in combination with the 5-minute retest, we understand that the stop loss area is above the one candle rule, and therefore this helped us stay in the trade longer. And now you can see we actually came back for another 5-minute retest, and just like that, you can see we just hit our profit factor. And on this trade, this was a 2.07 risk to reward trade, which means if we made $640, we were risking around $300 for that $640. Now, I have a very exciting announcement that I've never done before, neither have I seen anyone in the trading industry do. The goal will be to reveal everything that I know about day trading, but the best part is it will be absolutely free. So if you want to stay tuned with updates on that exciting announcement that will be coming soon, there's going to be a waitlist in the description, so make sure to save your spot. With this being said, if you want to learn more about price action, market structure, psychology, and strategy, make sure to click the playlist on screen now. It is full 10-hour free course filled with trading education. If this video helped you, make sure to leave it a like. If you have any questions, put them in the comments down below. Make sure to subscribe to the channel, and I'll see you next week with a brand new video.